SBI, we cannot miss that one. Let's pull up that one on the screens because asset quality has clearly improved. That's what your earnings are telling you, and that's the reason why you've seen that spike which has come in with regards to SBI. Now, the profitability was the key number that we should have been watching out for. If you talk about the profit number, that has come in at 20,160 odd crores. On the back of the stake sale when it comes to Yes Bank, that was something which would have kept the profit numbers skewed. The NI has seen a growth of around 3%. We're talking about 42,984 odd crores. Nyanada, where their research analyst at Axis Securities, also joining in. Nyanada, welcome to the show. And your first analysis when you talk about SBI, asset quality has improved. Your NI has seen a growth of around 3%. Operating profits, a dip for around 6.8% coming in there. Provisions have risen by 13%. We're talking of a 5,400 crore number when it comes to the provisions this time around. And there has been a one-time income due to Yes Bank stake sale, which is coming at 4,583 odd crores. If you remove this, what is your analysis of the numbers?
Yeah, hi, good afternoon. So overall numbers look strong. Largely, the earnings estimate look largely in line with our estimates, barring the one-time stake sale gain. Margins have surprised this quarter. Growth has been pretty strong at about 13%, very marginally ahead of our expectations. We expected a little margin contraction somewhere of 8 to 9 basis points, but on a calculated basis, it looks like there's a 6 to 7 basis points of margin improvement. That's something that's come as a surprise. OPEX growth seems to be slightly on the higher side, led by other expenses, and that's kind of weighing on the cost-to-income ratio. Also, we don't see much support from the treasury income this quarter, so that's another thing. But overall, seems like a good set of numbers. Slippages seem to be in control given the asset quality improvement, and recoveries also appear to be healthy. Yeah.
Nyanada, with regards to asset quality improvement, any comments there? What are you observing with regards to trends for SBI specifically?
No, slippages seem to really be under control. We don't expect any major challenges there as well. This, more or less, it should remain stable to slight improvement going into the second half of the year is what we are looking at.
Do you think that overall advances that have come in terms of segmental breakup could be on account of SME and retail segment seeing a higher traction?
So yeah, we were expecting that advances growth would be largely led by the retail segment. Also, we will watch out for management commentary on how the express credit segment that's been a little lagging in terms of growth. How does that pick up is something that we would want to watch out for. Yeah.
Okay. When you talk about, the other aspects from the press conference, what would you be watching out for and the key aspects that we should focus on?
So we would want to watch out for the growth commentary. How does it pan out from here on? So LDR seems to be very at comfortable levels, so growth should not be a problem. Something that we would want to look at would be how the margin trajectory is going into the second half of the year. So margins clearly seem to have bottomed out is what we feel currently. And as depository pricing plays in the second half, we should expect better margins going into the rest of the year.
Okay, so basically your expectation is a better margin profile in the second half of the year, and that's the commentary we should be watching on. In fact, stay with us, Nyanada. We have Vishwanath Nair, banking editor also, who's joining in from location. Vishy, what are you picking up in terms of the numbers? Because a good spike that has come in has cooled off as well, hits and misses.
Yeah, well, largely because this is profit growth is because of this one-time exceptional item that has come in. Yes Bank numbers are coming in at, Yes Bank stake sale figures are about 4,593 crore that is getting added to the net profitability. And that's probably why the profit number has actually grown, because otherwise operationally the profit's supposed to be lower. In case of the gross NPA figure, about 1.73%. So there's a 10 basis point reduction on the gross NPA. That's obviously a good sign for a bank of the size of SBI with a consistent sub 2% gross NPA figure. Even on the net NPA number 0.42%, that's a very, very strong figure as far as the asset quality is concerned. So obviously these things are going to play in favor of State Bank of India's results. But yes, as the analysts were earlier pointing out, we will watch out for any kind of growth commentary that is coming in from the management. Operationally, this looks like a weak quarter. Again, I'm mentioning this because this quarter we've also seen some banks show lower treasury income, because of which their profitability has suffered. So I still need to go through the detailed numbers, but as of now, that's what it looks like, because even on the NII front, it doesn't seem that bad a quarter. Yes, there was we were expected to see some amount of NII impact because of the rate cut that have come in. The transmission to the deposit rates is still going on. So we still need to wait and watch what exactly the growth numbers look like, whether advances growth has been really sharp. Remember Q1, State Bank of India had pointed out that their retail book is growing quite fast. Even on the corporate front, they are seeing quite strong growth. The management was pointing out that there was a large sort of book, about roughly 4 trillion, a little less than that, 4 trillion rupees worth of loans that were still approved but not disbursed, which were on the State Bank of India watch list, something that they will probably execute over the course of the year. So any kind of commentary about enhanced corporate growth, about retail growth continuing its pace, specifically because of the rapid rate cuts that we've seen and the GST cut that we've seen, all of that will be closely watched out for as far as State Bank is concerned.
All right, that is something that we're closely watching out for, and we'll get back to you with the details when it comes to this as well. But tell you what, Nyanada, I'll come right back to you, because I also wanted to understand what you think about the numbers, excluding the one-off. How are you looking at the numbers, and how are you making sense of the numbers, excluding this particular one-off that we've seen?
Okay. So NII clearly came in as a surprise, beating our expectations by a fairly wide margin. However, removing the one-time impact of the roughly 4,600 crores from the stake sale, clearly the earnings was largely in line with what we had estimated. That comes on back of lower treasury income, which
Nyanada, the question that Shreyansi had basically was with regards to the one-off gains that they've seen on the back of the stake sale when it comes to Yes Bank. If you exclude that item, then how do the numbers stack up?
Yeah, so exactly. Removing that item, the profitability would have been in line with our estimate.
Okay.
And this is despite a sharp spike in the OPEX ratios. And this beat is largely owing to the better performance on the margins front.
Dhanada, Vishwanath here coming into this conversation, just looking at the operating profit number, about 7% lower year on year. You mentioned higher OPEX, but apart from that, what else do you think would have probably contributed to that?
Yeah, it's probably the lower treasury income. So treasury income in Q1 was very strong for SBI and like many other banks. That is something that we don't expect to have been repeated this quarter. So that's something that's weighing on the PPOP growth, and also a sharp spike, which is almost about a 30-odd% spike in other OPEX. That's something that we would want to watch out for, the commentary there. That's also weighing on overall operating profitability. Yeah.
Even on the provisioning front, despite the quite spectacular gross NPA figure, even on the provisioning front, we've seen a 20% increase. Any indication that some of the banks out there have gone out and created more buffers ahead of the ECL framework that will come into play next year? But anything that you're seeing as to the reason behind this?
It could be a one-time buffer for the ECL transition that cannot be denied. But if that's of course, there's an increase in the absolute value. But if I look at a credit cost perspective, percentage terms, it's more or less stable at around 50 basis points. So nothing much to read into it in terms of asset quality. It's been fairly strong. Slippages have been pretty much under control, and we've not seen the unsecured stress that most others in the banking space. We've not seen that kind of get onto SBI's numbers so far.
Nyanada, quick view. What would you advise investors to do with an SBI with this kind of a number right now, the performance that you're seeing?
So we continue to recommend buy on the stock. We'll, of course, revisit our estimates post the management commentary today evening. But overall, we expect a slight upgrade in earnings, at least for FY26. So we continue to remain positive on the stock. Yeah.
Earnings upgrade for FY26, that could be on the cards. Thank you, Dhanada, so much for joining us on the show. Thank you, Vishy, as well, for joining us from location. In fact, we'll have the press conference shortly along with the management interaction.